With this, I give the mic to Sanjay Arora. Sanjay Arora, please.
Yeah. Thank you, Manoj. A warm welcome to everyone. It's pretty warm in Delhi at this point of time in the December season. So a very warm good afternoon to all the participants. As Manoj explained, my name is Sanjay Arora and I head the internal audit vertical for Aviva India for the last 2.5 years. I've been associated with the insurance industry since 2005, and in the last 4 years with my association in Aviva, we have we've gone on to taken the internal audit to a new platform and getting in continuous audit and concurrent audit on a great scale. It gives me a great pleasure to get you into an insight in terms of what the insurance industry is all about and how can continuous audit help us. And as Manoj mentioned, in terms of how can you take it forward in your own industries and in your own companies. Wherever you have questions or if you feel that I'm going too fast, please do interrupt me. Feel free to ask questions. I would want to have an interactive sessions, and I'll be happy to answer most of the questions. In case if I'm not able to do so, you can connect it. You can write into me on my personal email ID, which I will share with you at the end of the session. What I've done is for the benefit of the participants who come, as I understand, who come from insurance and non-insurance background. The first part talks about what is continuous auditing and where does it stand today. In the sense is we've been doing transactional audit over a period of time. What's the new era in internal audit? Why continuous audit? To implement a continuous audit framework, and what are the various tools and technologies available in order, which can help us in implementing this framework in our respective organizations. Thirdly, we'll move on to the insurance industry, which talks about the privatization of the insurance industry, how the insurance industry has the changing paradigm in the insurance industry since 2002. Where does it stand today, and how has concurrent and continuous audit helped the insurance industry, especially in talking in terms of Aviva India. And lastly, in terms of what have we done as a company, and as Manoj explained, I'll give you an example in terms of how have we implemented the framework in Aviva, so that you guys can do the same in your respective organizations. I'll spend around about 20-25 minutes on the continuous audit framework, and I'll balance 35-40 minutes on the insurance industry and the examples. And the balance for 15-20 minutes can be used for a Q&A session in terms of both on the insurance industry as well as on the continuous audit framework. To start with, we'll go on to the continuous audit. Now, what have we been doing over these years? We've been doing traditional internal audit till 2002, till 2004, which relied in terms of doing transactional data analysis. There was no concept of a test of a design, but in terms of whether other controls which have been laid down, are they effective or not. And this used to be done over a period of, used to have an audit cycle, which would be all areas in the company should be audited over a 3-year plan. And some areas, depending on the risk, would be done once in a year or once in 60-18 months. The balance would be once in 2 years or once in 3 years. And as such, these audits would be done at a point in time. So if I do an audit right now, I'll do the last 6 months or the last 1 year, depending on the volume of transactions and the resources available. And it would be a point in time analysis only itself. As a result, what would happen is you would have, if there's any error or if there is any control lapses, the control lapse would have occurred for a period of 6 to 8 months or for a year, depending on the time period post which you're doing an audit. And hence, it increases significant risk exposure for an organization. One is the other aspect to be considered is the changing regulatory environment. If you look at specifically on the banking side, on the insurance front, on new regulations being introduced by the Parliament on a day-to-day basis, it becomes difficult for organizations to keep abreast with the changing regulatory environment. With the new companies built, there's a lot of accountability on the CFO, on the management, on the internal auditor, on the compliance officer, and there is heightened spotlight on corporate governance as well. At the same point of time, a business needs to manage its cost, and maximize the revenue. Now, when you move on to a transactional audit, data is increasing. Data is going voluminous. If I talk about the insurance industry or the banking industry, you have customers which goes into millions and millions these days. And looking into the transactions records or the kind of transactions which they do on a policy or a banking account, it's going into voluminous. And hence it becomes difficult in terms of getting the right kind of a sample when you do a transactional based audit. And when the manual control breaks down, it becomes more difficult. What gets additional complexity is we have scarce resources. Being a cost function, management is never so proactive in giving us each and every kind of a resource and the necessary skill sets to do a comprehensive audit and give an assurance to the management. Systemic controls are there in place and the focus is increasing. However, no control, the system controls are never effective 100%. There are possibilities of breakdown because of bugs, because of error in coding, and hence a system control is not 100% reliable. However, still better than a manual control which is put into place. At the end, organizations are always exposed to audit, to fraud, to errors, to inefficiencies. Now, where do we find an answer to all this stuff? We need to give a comprehensive assurance to the management as well as to the board. Data is increasing, resources are scarce, heightened corporate governance, and we believe that for the new age era in the internal audit, continuous audit or continuous monitoring is the key. That is the solution which we as internal auditors we can use to provide continuous assurance to the management. Now, what does continuous assurance or continuous auditing or continuous monitoring mean? I'll explain these three jargons in the next slide. But what does it mean? It means, as and when a transaction takes place, either real time or near real time, monitoring whether the controls are actually effective or not. It depends on, it's a matter of a cost, it's a matter of expertise, whether do you want to do it real time or whether do you want to do it near real time. The whole essence is you identify the effectiveness of a control as soon as possible, so that if there are any control breakages or any control lapses or there are any fraudulent transactions or there are any manipulations, these are detected at the earliest so that remedial steps can be taken and the risk is mitigated, risk is controlled. It doesn't spread on for 6 or 9 months, which happen in a transactional audit. Now, and hence continuous assurance means giving an assurance on the accuracy and validity by analyzing huge volumes of data. This continuous audit does not mean that you do not do any documentation checks or doing a test of design. Those are still fundamental aspects of an internal audit. These need to be continued on whenever you're doing an audit. Continuous audit actually it's a layer on top of it. It helps the giving management a continuous assurance on the controls. It's an assurance. It's not a control in itself. Management cannot take it as an excuse in terms of a continuous auditing framework being there in place to say that you're not going to implement any controls. It cannot say that an audit has a checkpoint, it's detecting it on a near real-time basis, and hence we as management do not need to put in effective controls to mitigate the business risk. It's their attribute, it's their responsibility. They need to implement controls. At the end of the day, an auditor's job is to ensure that the controls are working, to give an assurance that the controls are working. And hence continuous assurance or continuous auditing or continuous control monitoring is not a control in itself. I have seen over the last 4 years, and in fact in my previous organization, that it is treated to be as a control, which is a wrong practice. Moving on to the next slide. In the previous slides, I used some jargons of continuous audit, continuous assurance, and continuous monitoring. Let's decipher each one of them. Where does each one of them stand? Who does it? What's the relevance? And how does it help the management and the board in getting an assurance on the effectiveness of controls? At the center of it, it's all about giving assurance. The management wants assurance. What continuous auditing and continuous control monitoring helps is giving continuous assurance to the management. Now, the assurance can be given in two parts. One is by way of continuous auditing, and the other attribute is continuous monitoring. Continuous auditing is typically done by an internal auditor. And what he does is any audit which was done earlier by way of a transactional auditing or by way of a audit cycle, if it is done on a more regular or a frequent basis using CATs and using technology to do it on a more real-time basis, that's actually called as continuous auditing. It's simple. What you do on a yearly basis, if you're able to do it on a daily or a monthly basis, it gives you continuous assurance, and hence that's called as a continuous auditing because it's done at the end of the day by an internal auditor. However, continuous monitoring is not done by an internal auditor. Continuous monitoring, as the word suggests, it's monitoring of the controls, and it's done by the management. What audit independently does is evaluate whether the management actions are sufficient or not. Are they comprehensive or not to the control environment? Okay, and the method which is used by the management is something more or less similar to the method or the tools which are used by an internal auditor in doing continuous auditing. So hence the difference being that continuous monitoring is done by the management, which is much more proactive, which is their job to see whether the controls are working in the business unit or not. Continuous auditing is an independent assurance being given by the auditor to the management, to the board. Now, obviously, there might be questions in terms of if there is continuous monitoring, then why do we need continuous auditing? Or if there's a continuous auditing, why do we need continuous monitoring? Now, I'll answer that question in subsequent slides. But if I depict this entire continuous auditing and continuous monitoring in a different way to give you have your business systems and processes which are at the base of every organization, which is you have systems which would be your policy admin system in case of an insurance company, which could be in the case of Oracle Financials or SAP, which would be your financial systems. In a service-based organization, it could be a customer relationship management software or an agency management software. And above them are your activities and transactions which which comes from your business systems and processes. These are basically nothing but transactions which could be in the sense of a vendor payout or a customer payout or a customer buying a new policy. Now, if you see the left-hand side of the screen, it says you have the two key stakeholders in terms of the management and the audit function. Continuous monitoring, if you see, is technically done by the management, and continuous auditing is done by an audit. The results of a continuous monitoring, the aspects of continuous monitoring, the rules are all tested over a period of time by the audit function to give an independent assurance on the management's activity. These activities result into a continuous assurance to the board. Now, if there's a continuous monitoring in place, why do we need continuous audit? And if you have a continuous audit in place, why do you need continuous monitoring? Both of them are inversely correlated. If the management puts in significant efforts in monitoring their controls, the efforts on the internal audit team to do continuous audit gets reduced. However, if management has little capabilities or management does not have the necessary bandwidth to do monitoring of controls, an audit's effort in doing continuous audit increases. I have seen both kind of organizations where management has spent significant amount of time and effort in monitoring their own controls. And hence what an auditor does at the end of the day is seeing whether the management activities are comprehensive or not, and do they give an assurance or not. Whereas I've seen companies where management has done nothing or management has not been able to put in enough control, monitoring of controls. That's where an internal auditor steps up and actually performs continuous auditing. At the end of it, it's a combination of continuous monitoring and continuous auditing which provides assurance to the board. I move on to the next section in terms of continuous auditing framework, in terms of how can we implement. I'm going to spend a lot of time on this. This topic is very close to my heart as well, having spent 4 years out of my last 11 years in implementing continuous auditing framework. Now, the question a lot of times there might be a question in terms of on what all areas can we actually implement continuous auditing framework? Can we be implemented in all areas, or is it enough the auditable populations which are to be considered? One is continuous audit, but there are two conditions to it. There should be data available, and when I mean by data, data could be in any form, but it should be the correct data. It should not be garbage. But the moment you put in garbage in, you get garbage out. So it could be in any format. It could be in CSV format. It should be the valid data. You should have rules. Those rules can be validated. If I go about an insurance, these rules can be anything. Safe product. These rules can start from, when you issue an insurance contract, when an insurance product has various rules. For example, there are who can insure. There's a maximum sum assured. There's a minimum premium. There's a maximum premium. These are all defined in a product spec which is approved by the regulator. Now these are rules, and if these rules can be validated provided you have the right set of data, be it in whatever format. Now, is it limited only to operational? No, it's not related to only operational. You can either do it for operational processes, you can do it for financial transactions, you can do it for regulatory transactions, you can do it for any kind of transactions provided the first two conditions of rules and data is met. As I mentioned earlier, this does not reduce your scope or the efforts of an internal auditor in reviewing sample transactions where documentation reviews are required. Now, what could those be? Say if I'm doing a claims review of, or if I'm doing an expense review, or if I'm doing a procurement review which requires me to study whether free quotations have been taken or not. Now, continuous auditing cannot help me. Data analytics cannot help me, because I need to review documentations for 3 quotes. Do the 3 quotes look fabricated or not? What parties, a concurrent audit cannot help me. This audit can be used, are there in place. I go down to an approach in terms of how it's a cycle in terms of how can one introduce a continuous auditing framework in a company. There can be various ways of doing it. I have done it in 2 companies and I found success with it, and hence I'm sharing those. If any participant has a different viewpoint, I would be happy to take them and we can deliberate on it. At the center of it is continuous auditing, and as I mentioned, it's a circle which has 6 attributes to it. The first attribute is you establish your priority audit areas, the areas which you would want to cover as part of a continuous auditing. While you establish your priority areas, it's more or less similar when you do an audit planning cycle. You identify an auditable population, post which you break down into an inherent risk and a residual risk, basis which you evaluate in terms of which is a high risk area, which is a medium risk area, and which is a low risk area. Obviously, it all depends on, when you formulate your priority areas, it all depends on the strategy of the organization, it all depends on the regulatory environment, your past experience, which will help you in identifying your priority areas. Do not forget the first 2 attributes which I mentioned in terms of the data parts. There might be some areas which are your priority areas, but since you do not have sufficient data, or the data is not in a structured format, or it involves documentation checks, obviously concurrent audit, continuous audit will not help you out there. So once you've identified your priority audit areas, you then break it up into the first two attributes: available, not available. The ones which are available becomes your priority areas from a continuous auditing framework perspective. The second attribute, just a second. The second attribute is identifying the rules. Once you've identified the priority areas, we go down to the rules. As I mentioned to you on the product side, I mentioned to you some of the rules which can be implemented. Basis each and every priority area, you break down into the various rules which needs to be validated. These rules are nothing but your control points which needs to be validated. So it can be, for procurement, for insurance, the rules will differ from area to area. However, the rules are nothing but, as I mentioned, are your control points itself. In the subsequent slides, I will take you through the rules which we have automated, which are available in an insurance industry, and which we have automated, or around which we do continuous auditing. Once these rules are identified, we determine the frequency of validation in terms of whether do you work priority basis or a fortnightly, a monthly, or a quarterly frequency. My experience suggests anything doing more than a quarterly or a monthly basis, it's equivalent to doing a yearly audit. It's not continuous audit at the end of the day, because you still have exposed the company to a 1 month or to a quarter of exposure, and hence continuous auditing makes it more effective if you do it on a much more frequent basis, maybe on a day end once your batch processes have ended, maybe on a weekly basis or on a fortnightly basis. The important point out here to understand is how good are your base systems which process transactions, how efficient or how robust are they to churn up the data which you require for analysis. And the second attribute is, what are the kind of tools and technologies do you plan to use to implement a continuous auditing framework? These two attributes will also play an important factor in understanding and in identifying or determining the frequency of the continuous auditing framework. We have various tools available in the market, whereas you can have in-house solutions which can be MS Access based, Oracle or SQL based, which then obviously has its own pros and cons, both from a cost, from an efficiency, and from a skill set perspective. And hence, while you in order to determine the frequency, the first two areas, that's priority areas and the rules, impact the in terms of it will have an impact on determining the frequency. Your systems and the tools which you plan to use will also play an important role in identifying the frequency. Once your frequency has been identified, you develop the queries. This is where the trickiest portion comes across, is because you need a specific skill set to develop queries. These skill sets are also required when you do a yearly audit, when you do an audit as per a cycle. But the skill sets then differ. When you do a cyclical audit, when you do once in a year audit, you tend to, since you do it based on sample, you don't do it on 100%. The kind of queries and the kind of scripts that you write are very simple and can be managed in an Excel. However, when you got to do it on a day-on-day basis, and when you want to handle, you don't do on a 100% basis, and when the data is voluminous, when the data has to interact with multiple systems, there it becomes complex to write those queries in Excel. And hence you need either Oracle and SQL, or you have ACL and IDEA, which helps these days to do concurrent audit. And as a result, the skill sets which are required in a continuous auditing framework are quite different from a skill set which a normal auditor actually possess when he does a yearly audit or on a transactional basis, which is the old method of doing an internal audit. So while you develop queries, you've got to consider You need to understand the rules. You need to develop the queries which are more in line with the frequency. You need to develop your queries in a smarter way to ensure that there is no load on your policy admin system or your financial systems. You're able to extract the data in the best possible way, and hence developing queries require a specific skill set when it comes to continuous auditing. Once your queries have been developed, obviously you run it. You do a test of effectiveness. That is, you run your queries on the transactional data, basis the frequency, and you communicate results. This is nothing but, at the end of the day, issuing an audit report, which in the form of a continuous audit is nothing but publishing dashboards to the senior management, to the functional management, in terms of what are the significant exposures or what are the errors in the transactional data. Once you've communicated the results, once we have communicated the results, the management, as in an audit, the management communicates an action plan with a timeline to implement the action plan. So in case of a continuous audit, is the same. The management will give you an action plan which needs to be then tracked and followed up in terms of whether has those actions been implemented or not. Now, with this completes the entire circle in terms of how can we implement a continuous audit framework. It sounds simple, but yet there's a little bit of amount of a complexity, and it has its own challenges when it comes down to implementing a continuous auditing framework. Now, what are these challenges and how can we overcome these challenges? Before we go on to challenges, in order to develop those queries, in order to communicate results, as I mentioned earlier, you would have your systems and tools in place. They could be in the form of Access, SQL, or they could be form of you having a lot of continuous audit solutions which are available in the market these days, which can help you in doing them. And these tools also have reporting mechanisms and escalation mechanisms. I will talk to you about a tool in my subsequent slides which we have introduced in the last 3 months, and we have seen success in the last 3 months, and we plan to scale it to further areas. Coming back to challenges on implementing the continuous auditing framework. What are these challenges? The first challenge is in the management culture. It's not only the management culture, it's the change of the culture in the internal audit function itself. The biggest challenge which I faced, and many of you guys would have also faced, is why doing continuous audit? What's wrong with doing a transactional audit or a sample-based audit? When you do continuous audit, the management is also bombarded with daily exceptions as compared to a yearly kind of a monthly kind of a stuff. Well, it benefits them, but then they have an audit report on a daily basis in their inbox, and hence they feel that they're getting bombarded with audit issues, and hence the reservation of change in the culture in terms of an acceptance towards continuous audit. But believe me, when you show the kind of results a continuous auditing framework gets in, over a period of time there is an equal amount of buy-in from an internal audit function as well as from the management. Some of this buy-in also comes in from the top in terms of an audit committee or a board realizing the benefits of the continuous auditing framework. The second comes in terms of understanding data and processes. Now, why do I say this is a challenge? You need to understand data and processes in a normal transactional audit or a normal process-based audit as well, or a risk-based audit. Why is it such a challenge when it comes down to a continuous auditing framework? There's a difference to a certain extent. When you're doing a normal transactional or a process-based audit, you need certain transactional data. And in most of the companies, IT has reservation in giving direct access either to the production or the UAT environment or the reporting environment to the systems. And as a result, what normal auditors do is give a list of all data requirements to the business, It's the business job to actually extract the data from the source systems and provide it to you, provide it to an auditor. Or to get independence, an auditor would actually raise a request directly with the IT function, and they would extract data from the back end and give it to the auditor. And hence an auditor is never exposed to the back-end environment of the entire application or the databases which it has to read to. However, when it comes down to continuous audit, the auditor as well as the technical person who are going to develop the queries needs to understand the back-end itself. Because the moment my experience is, and once the internal auditor team and the technical team in terms of who's going to develop the tool and the queries, they understand the rules and the backend themselves, it helps them, or it helps the continuous auditing framework to provide magnificent results. And those results are I cannot quantify those results. I've seen them personally in Aviva and in other companies as well. The moment you leave down to an IT function, or the moment you leave down to a business owner or business function to help you with the data, it slows down your efficiency and effectiveness. The moment an internal auditor understands the data, understands the backend themselves, it has added value to the function and to the business. The next is the biggest challenge which I discussed, or the biggest rule which I said at the start of the continuous auditing framework session was, how do I get data which is accurate, which is complete, and which is available at all possible times of time, or the time when you need to actually test it. So data has to be accurate. If there's garbage in, you'll get garbage out. And believe me, if the continuous auditing framework or the tool does not give you the right set of results, it is not good, because the management, the focus or the importance or the belief that this tool will help them diminishes over a period of time if they get wrong results. And there is a possibility of the results being wrong. The reasons can be the data is not accurate, the data is not complete, the rules have not been understood, or the queries have not been developed correctly. Majority of the times it has been that the data is not accurate, which results into the tool analyzing wrong data and hence throwing out wrong results. And hence when as I started, it says the data has to be accurate and has to be complete if you got to implement a continuous auditing framework. The next challenge is volume of data. Excel has its own limitations, so does Access has its own limitations, SQL has its own limitations, and all these tools and the various tools available in the market has limitations to a certain extent. However, it depends on the kind of scale of an organization in terms of what the volumes are, basis which you can go for an appropriate tool. We have been able to manage it with MS Access for the last 3.5 years, finding it difficult to manage it with MS Access these days, and moved on to a different solution, which I'll talk to you guys about in the next few slides. So as and when the volume of data increases, the complexity increases, the need to look at alternate solutions for analyzing data or an alternate tools for presenting the reports and the dashboard to the management needs to be evaluated and needs to be introduced into the business. The next key challenge is the skill set. The skill set, as I mentioned, for data analytics is very important, because there are complex queries which needs to be developed. These complex queries requires a lot of if-thens, if-joins. We would have all gone through it. We would have all been doing it. But let's understand, when you're doing it for a 50 sample transactions or 100 sample transactions, it's a different ball game. But the moment you do it for a crore of transactions, or say a 5 crore transactions, it's a different ball game. It's not only simple writing a query at the end of the day, it's also optimizing it. If you do a continuous auditing on an area which involves 2 crore line items, and it takes you 5 hours to churn out a result. If it takes you 5 hours, And if you start in the morning at 9, you're running it till 2 o'clock in the afternoon. And if you publish a dashboard at 3 o'clock or 4 o'clock to management, your entire day is gone. The continuous audit will not have any impact because your one full day of transactions has further been impacted. If you're implementing a continuous auditing framework, it makes more sense for the tool to throw you an output at the beginning of a day so that the management can take in remedial action immediately rather than at a day end as well. And in order to do that, you need to have a tool which can handle such kind of a volume and which can also, write the scripts, and you need a technical person who can write the scripts in a simple manner, which can churn out data and do its analysis at a speed of a second. And hence the need or the importance of a data analytical person or of a skill set of such nature is very critical. I've spoken a lot about the tools. The tools and the skill set go hand in hand in implementing a continuous auditing framework. The next element is timely resolution. When you talk of an audit, of a process-based audit or a transactional-based audit in terms of doing a sample transaction, when you find an error, you find an exception, the management actually gives you a timeline and then it implements a timeline. Most of these areas speak about changing a particular process, and hence there's a time lag in which management implements it. It's not able to do a process change immediately. It takes 5 or 6 months, it takes a month or 2 or 15 days to implement a process change, and hence the date is a future dated date. However, in continuous auditing areas, since these are all based on data, the time to fix it is very critical. To give an example, say for example, I'll talk about an insurance example at this given point of time. If you have a policy for which a commission is being wrongly paid out to an agent or to an employee, and you identify it today, you need to identify why did it go wrong. Is there an error in the rate setups? Is there error in the logic calculation? And if you need to pay that error, that commission or that incentive tomorrow, you need to change it immediately, or you need to change it by the time the next payout cycle happens. And hence, continuous auditing makes, when you implement a continuous auditing framework, it makes more sense to have a defined task with the management in terms of when issues are going to be fixed. Of course, I do understand that management, there are certain issues which require a code change in the system or which require certain policy decisions, and hence, from that perspective, it's not going to be an immediate fix. However, my past experience on a continuous auditing framework says 80 to 85% of your exceptions can be fixed in a day or two. And there are only 15% of your exceptions which require a 10 or a 15-day change, which require a coding to be done in your policy admin systems or your any financial transaction system. And hence, timely resolution of issues is a key for a continuous auditing framework. Just imagine that if you publish day-on-day reports and if the management is not able to resolve them, your continuous auditing framework, through being there in place, through identifying all the exceptions on a daily basis, you as an internal auditor doing your job, but at the end of the day, the business is still exposed to that risk. And hence, when you implement a continuous auditing framework, it's very important to have a buy-in from the management, and that too from the top, on the resolution of the defects being identified in the continuous auditing framework. Lastly is the cost. It's an old saying, the controls, and cost go hand in hand in terms of the cost of implementing the control should not be higher than the risk exposure. The same is a catch out here. When you implement a continuous auditing framework, the upfront costs are on the higher side because of a tool getting in place, because of getting a system analyst or getting a technical person to write those scripts, and obviously the scope of doing a concurrent audit in terms of the first 6 months or 7 months, depending on areas which you want to implement, would require heavy manpower in terms of identifying the rules, understanding the databases, developing those rules, getting those dashboards up in place. And hence, the upfront cost in implementing a continuous auditing framework are higher. However, going over a period of time, the cost tapers down and it actually helps in doing, and the benefit then starts reaping in. One also needs to understand is that the cost of implementing a concurrent audit tool somewhere offsets your exposure or your efforts in doing the process of a transactional based audit. Because as you move on areas onto a continuous auditing frame based or a cyclical based audits gets reduced. And hence over a period of time you see an offset between the cost associated with the continuous auditing for doing a transactional based or a process risk based audit over a period of time. These are the challenges which I have encountered in my last 4 years. And there are ways, as I explained, in terms of getting management buy-in, getting the right set of tool, getting the right set of people, having the appropriate cost approved by an audit committee, getting in people from an IT background, CISA qualified people on the audit function who can understand the systems, who can understand processes, which will actually help you in easing out these challenges while you implement a continuous auditing framework in any organization. I move on, as I mentioned to you in terms of various tools or various technologies being made available to implement a continuous auditing framework. Over the last 3 years, we started our journey somewhere in 2009. And we were not sure in terms of how we're going to do it. We did not have the right kind of a skill set to do it. And since we were doing that for the first time, we tried our hands using MS Access, and it was fine. We had this, we got the requisite skill sets after much struggle, and we used MS Access with SQL and VB to actually develop the front ends and back ends which would extract data from the policy admin system. However, it had its own limitations. MS Access, you can extract data. I think you can analyze around about something about 2 GB kind of stuff. Anything more than that, it becomes complex. It becomes time consuming. You can't do it. MS Access hangs. You would have technical people who are available in the market who can do these script buildings and queries, but then they do not understand the insurance business or the business of any business for that matter. They would not understand audit concepts. They would not understand audit principles. It's very difficult to tell them what can go wrong. You need to give them, do these 5 analyses, build these 5 scripts, and they will do that. And hence it's difficult in terms of getting a right mix of people. What can help you out is getting the right tool. We've implemented one tool which is nothing but AUDITime. AUDITime is actually a vendor, and they have a tool by the name of Arbitis, which we have implemented. How does it operate? And this is a real-life case study. If anyone wants to, come down to Aviva and want to see a demonstration of it, see an example of it, spend time with me and with my team in terms of how we've built them, most welcome to do so. When we implement any system, when we implemented this tool, this is the framework by which we implemented the tool. You have your source system below, which is your policy admin system in our case, a customer relationship management, financial systems, and these could be any systems, could be any database, could be an Oracle 10G, could be a VB, could be any kind of a system which you have. On top is where this tool sits. Okay. This tool has 3 layers. One is the analytical layer, one is the application layer, and one is the presentation layer. All these 3 layers have its own significance, have its own importance in terms of on the continuous auditing framework. Now, what does these layers do? Each of these layers The analytical layer have a data extraction engine, have an analytical engine. The data extraction engine does nothing but extracts data from all your systems. The analytical engine will churn the results based on the rules which you have set in, and it has an exception database which would contain all your exceptions. And hence these acts as a repository. This is nothing but, you can call it as your loss repository as well to a certain extent, because all your exceptions would have financial losses, would have exceptions to your regulations, would have, and hence this becomes like a kind of a loss database for a company to a certain extent. You have an application layer which sits on top of the analytical layer, which is nothing but which the business team which uses, which the technology team will use, which the audit team will use to set up these rules, to track these results, to close the exceptions which have been analyzed, to monitor in terms of how many exceptions have been identified, what is the current status. So that's an application layer which is nothing but helps the management, helps the team in doing day-to-day activities. And at the end of the day, these results needs to be presented to the top management, and hence you have a presentation layer which is nothing but the dashboards. The beauty of concurrent audit is it's not a detailed word-based report, but it's basically nothing but dashboards in the form of graphical representations, which is very easy to understand, quick to grasp, and the management knows what areas to focus on and what not to focus on. We've implemented this. Certain sections gone live, certain sections about to go live. We went live a couple of days back with this, and the results are there to see. This tool actually helps you, just to give you a background, we've done it on our results are analyzed on a day-to-day basis. At the day end, once the batch job has been executed by the application, by the DC team, this tool, there are schedulers which have been built in, which automatically picks up data from the base systems without any manual intervention. The rules are already set in. There's a scheduler to run the rules. The scheduler will run the rules, throw out an exceptions on its own, which would then send periodic reminders, escalations to the management in terms of any issues coming in. It's all seamless. There is no manual intervention by an internal audit team. It's seamless. Where the intervention comes in is when the management close an action point, close an issue. Validation of an issue, whether it has been closed or not, is also done by the tool itself. You do not require any auditor to go back after 5 days and check whether what they have done is it done correctly or not. The tool has the capabilities. We've developed the tool in such a way. The tool had the capabilities, and we developed in such a way that all the closures done by the management are picked by the tool the next day, and once again executed to validate whether has management taken the right steps or not. Now, benefits of the tool, multiple benefits. One is we extract the source data ourselves, therefore independence. 100% of the data being audited. There's improved quality. There's improved quality. There's deeper coverage, 100% of data being audited, and hence there's deeper coverage. You increase your efficiency. As I mentioned, once these rules have been set in, the initial 2 or 3 months are time consuming. But once these rules have been set in, the tool works on its own. It extracts the data extraction, the validation, the exception handling, the reporting, it's done on its own. And hence, resources get freed up to actually focus on the high risk areas which require test of designs, which require process reviews, rather than actually getting into data and transactional work. It frees up people. It frees up the resource to do quality work rather than doing transactional related work, which is managed by a tool at the end of the day. This continuous visibility of controls, that's the end of the day, in the sense we want continuous assurance, and hence we have visibility of controls in terms of on a continuous basis. It helps the management. It helps them in improving the performance. And at the end of the day, we add value to an organization. Both ways. We free up resources. They can work on much more value-added projects of larger nature. They get comfort on the controls on a data analytical basis, on a day-on-day basis, and helps. It's win-win for either of them, be it an internal auditor in building their skill sets, or be it management. The other benefit what we get is We can identify operational efficiencies areas, we can arrest revenue leakage, and I'll talk about the revenue leakage part in my subsequent slides when I go to an insurance industry. It also helps to reduce cost over a period of time, not immediately. Immediately, there's a strain on cost, there's an increase in cost because of the tool and the skill sets. But as I mentioned earlier, as I mentioned above as well, over a period of time, the results one offsets it. It becomes a self-funded function. For example, audit function in Aviva, it's a self-funded function for the next 5 years. Similarly, the concurrent tool will help you in funding your entire audit team's budget. It also helps you over a period of time fund the cost which has gone in building that tool and implementing the tool. These are the results, these are the practical benefits which we have seen over the last 4 years, which have been vouched by the audit committee, which has been vouched by the business as well. I move on to the next segment, which is the topic of the day as well, in terms of the second most important topic in terms of the insurance industry, and give you an example in terms of how we've done in the insurance industry. Insurance industry regulated by IRDA came in the year 1999. I'll go a little bit fast out here so that I can focus on the insurance aspects in terms of what have we done differently in the insurance space. Everyone knows insurance. IRDA is there to regulate the insurance industry, or a heavy regulated industry. We have life insurance, 24 life insurance players and 27 non-life insurance players. Having a mix of public and private. Obviously, public, there are only 7 entities, and the balance all other private entities. Now, let's understand in terms of why did we go on to a concurrent audit, and hence you need to understand the shift of how did the insurance industry grow over the last few years, and why the need for a continuous audit. I have seen continuous auditing getting implemented in Aviva in the last 4 years. I have seen other companies also in the insurance space also implementing continuous auditing, and main reason is here in this slide. Came up in 2099, 2002, 2003 on a growth spree. A lot of insurance companies came in, the likes of HDFC, ICICI, bank assurance. In terms of banks started selling insurance business. 2004 to 2008 was a time when you see 8%, 9% growth in the GDP, and therefore the momentum was let's grow at any cost, and therefore the focus on more sales, getting in more customers, rapid expansion, more branch networks, going into tier B, tier C kind of cities, and hence a lot of cost outlays. But definitely it resulted into increase of premium as well. New products came into the play, and new products, not only new products, in fact complex products also came into play. New agents also being kept on added because of the growth phase. It was a secondary source of income for agents, and for new agents also came to place. What happened? 2008 and 2012 came the subprime of the financial crisis. The markets came down doubling. Most of the products were unit-linked products, which are pure investment products, which have an insurance component, which have insurance products having an insurance component, I would say so. 2002 to 2008, because of the rampant growth, there were rampant mis-sellings also which happened, and as a result, there were a lot of backlash from the investor community, from the regulators as well. The insurance business, it's a different kind of a business with a long gestation period. Normally, typically, an insurance company breaks even 7 to 10 years, and for the first 7 to 8 years, there were losses by insurance companies. At the same point of time, came in regulations which had impact on the profitability of a business, and hence of an insurance company. It capped commissions, it capped the margins, profit margins which an insurance company can make, and hence insurance companies had to revamp their products, which means change of systems. Had to implement tough cost control measures, and as a result, a lot of policy decisions changed, a lot of regulations got implemented. There were a lot of systemic changes which were required in the systems of an insurance company. What's so different in 2013? We see a plethora of regulations coming in. We have more than 10 new regulations which came in 2013, which has changed the way insurance and which has changed the way an investor looks at an insurance market. Highly regulated in the year 2013. It started in 2012, and it's become more highly regulated in 2013. Various insurance companies being fined. The fine ranging from 10 lakhs to around about 4 crores. Never seen such kind of penalties in the insurance industry. The penalties ranging, reason for penalties being non-compliance to IRDA regulations, non-compliance to product norms, non-compliance to investment norms, and multiple ones which I'll take in the subsequent slides. One main reason why auditors these days, or the board these days, looking at much more kind of a robust assurance or concurrent assurance rather than doing a one assurance only over a period of time. The regulations once again came in and new products had to be altered. This means change of the systems once again. Every new product results into changing your systems, configuring your systems once again into this onto your policy admin system. Over a period of the last 10 years, insurance companies have seen their products changing over the last five times over the last 10 years. Some due to regulatory interventions, some due to market pressure in terms of getting guaranteed products when there was a financial turmoil. So due to regulatory environments and due to the financial crisis, insurance companies have seen products changing over the last 10 years, has seen more than 5 times their products changing over the last 10 years. And believe me, these adds complexity to your systems. Now, because of these regulatory changes in the last 2 years, what has happened? People have moved away from unit-linked products to traditional products, impacting the margins of an insurance company. Though new ULIPs are investor-friendly, but still the investors do not want to get into ULIP products because of the market risk. Insurance companies had to focus on cost rationalization, had to variabilize in order to protect their profits. And from a distribution perspective, it's making it more difficult for a distributor to sell insurance product. Distributor wants to have new sets of arrangements in terms of, because at the end of the day they would want to maximize their incentives at the end of the day. Need to exit out of out of small markets, and hence customer servicing was becoming a big issue. And due to cost pressures, insurance companies had to look at other means of soliciting business in terms of either going to an internet, to a web aggregator, or doing telemarketing, which has its own challenges in terms of compliance to regulations, doing need-based selling, how do you ensure the customer has understood an insurance product, and hence the need of having more robust and control environment, and a framework which gives the management and a board and assurance in terms of controls working fine. To give you a brief on what are the various kinds of regulations which impacts an insurance industry, because these determine what are the areas which can be audited on a continuous basis. You have the investment regulations, you have the Policy Protection Act, which talks about tax in terms of you need to respond to a customer within 3 days, 5 days, 10 days, you need to send a policy pack to him, and it talks about various other regulations which help in protecting a investor, help in protecting a customer. You have the maximum fines and penalties which have been levied by a regulator on account of a policyholder protection, and hence increased importance by the management to ensure that Policyholders Protection Act is complied with. That's one of the key areas where continuous auditing has helped us. Commissions and incentive structures. We have various regulations which talks about commissions, the maximum cap of commissions that can be paid to an agent. Another areas which has led to the maximum number of exposure on fines, which has seen many brokers getting the license cancelled, not getting renewed by the regulator because of getting excess commission or getting excess incentives from an insurance company. That's another area of key significant importance. In fact, this area is one area where the regulator wants an audit to be done on a half-yearly basis and a report to be filed with the board and the audit committee, with an annual report to be filed to IRDA as well. Now, if it has mandated that it needs to be done on a half-yearly basis, and hence it makes more sense if people can do it on a much more better frequency. And hence this is one area which have also helped us in which can be covered as a scope when it comes down to concurrent audit. Distance marketing, something new which has come up. File and use provisions. What's a file and use? Any product of an insurance industry gets approved, needs to be it has certain specs which are documented in a file and use product, which a file and use document, which is approved by the regulator. No product can be rolled out and implemented or can be sold by an insurance company till the time the file and use is approved by the regulator. Now, what does the file and use contain? The file and use contain the the product specs, which if you guys have bought an insurance product, it covers laundry of things like minimum sum assured, maximum sum assured, premium conditions, when can you pay it. It could have conditions on what if the customer dies, what if the customer wants to surrender the policy, what if you don't pay your premiums, what if you pay your premiums, if the customer survives during the entire term of the contract, what is the maturity value, surrender values. Then it also have certain additional features for a customer. If it's a unit-linked policy, if he wants to switch, if he wants something called an automatic asset allocation or a systemic transfer plan from, so he can manage his funds. If he wants to increase a premium, decrease his premium. Those are various conditions those are various features or facilities which are available to a customer when he buys a product. All those documents cannot be non-compliant with. Another area where the regulator has been heavily fined insurance companies on non-compliance to file and use provisions. And hence one area which has gained significance when we talk about concurrent audit. We've been successfully implemented it in the last 4 years. In the last 4 years, our main focus has been on commissions and filing use provisions. Advertising regulations to protect the customer. We have AML regulations from a financial crime and bribery perspective. You have certain rural and social sector obligations which says where do you need to sell policies, a minimum number. You have some new regulations which are coming in place in terms of a standard proposal form, suitability and need analysis. You have something on persistency which says an advisor needs to sell X number of policies and he needs to ensure that renewal premium is collected on X number of policies in order to ensure that his license is continued and he can continue on selling policies. You have the health regulations coming in place and electronic issuance. These are some of the regulations, some key, some in draft pipeline, which can change the face of the insurance industry over the next few, over 2014. I come to the last segment. We are in time. We're around about 1:05. We have around about 15-20 more minutes, and then we take the Q&A. We've discussed what the framework, how the framework needs to get implemented on the continuous audit side. We've seen the insurance industry. Let's go to see in terms of what have we done on the insurance industry side. If you go to see an insurance industry side, the insurance life cycle, this is the entire life cycle. Approved by the idea, gets launched. It's then sold by the distributor. Once the distributor sells it, the policy gets logged in. It goes through an underwriting process whereby you do a financial underwriting check, whereby you assess whether the customer has the financial capabilities to pay. You do a medical underwriting, whether is he sound enough to be insured, is he medically fit enough to be insured, and that's what is called as medical and financial underwriting. And then you issue a policy. Obviously, there are certain preconditions to issuance of policy, which we'll talk in subsequent slides. Then comes is the policy maintenance, which is nothing but in terms of policy printing, and then you will have your premium collections and everything else, which will go on to the policy maintenance side. Then goes on to your policy payouts. Then goes on to your policy reinsurance. If a policy needs to be reinsured, we reinsure. Not each and every risk is borne by an insurance company. We cap the risk. We have a reinsurer who takes the risk, and you pass on certain of the risk to a reinsurer. Post which you have the policy servicing. Policy servicing is nothing but, as I mentioned about, was if he wants to surrender his policy, if he wants to do a free look, if he wants to change his premium, wants to manage his funds, do a switch. That's what policy servicing, change of address, change of nominee, that's what policy servicing is all about. Then moves on policy accruals. Every policy has accruals. I will not say every policy, depending on the nature of the policy. Some policies have guaranteed benefits, some has loyalty additions. Unit-linked policies has, they don't have such things. They have loyalty additions, but they mostly have, since they are mark-to-market and they have invested into the market, you have the NAV, whereby your funds move up and down depending on the way the market reacts to. And lastly, then comes the policy payout. If the customer dies, customer wants to take a maturity, customer wants to do his money back after 5 years or 7 years after the surrender lock-in period, or say for example, if it's a pension policy, he wants to convert it into an annuity policy, and that's where the policy payout cycle comes into place. Along with it, parallelly what moves along is the distributor payouts, whereby you pay out to your distributors for the policy, or the agent or an employee who sold the policy for you in form of commissions, form of incentives, R&R, and at the same point of time, there's an investment management which happens because you manage the funds, and you have some component of an actual reserving which will reserve in terms of how much amount of liabilities needs to be held. Because at the end of the day, this is policyholders' money. You guarantee him certain benefits at the end of the life cycle, at the end of the policy term, and there's something what goes as an actual reserving in terms of what would be my liability which needs to be held, and therefore that's actual reserving. It's quite technical in nature and require an actual skill set. Over and top of these are your other sub-functions, which is nothing but your finance function, your admin, your IT, legal and compliance, marketing and HR. Now, areas in green depict the areas which we over the last 4 years have automated it and got onto the continuous auditing framework on the MS Access side. Slowly our endeavor is to move on to the concurrent tool which I spoke of. The yellow area signifies areas where you've done limited work, considering the technicalities into play. We've done limited work on the actual reserving side of getting them on the continuous auditing framework. Now, what I presented in my earlier slide, this will give you a pan-India, over the pan processes across the insurance industry in terms of what is there on the continuous auditing side and what's not there. So if you go to see, you have the sales and distribution as one vertical, you have actuarial, finance, risk, legal, compliance, HR, customer service, and your IT operation side. If you look, majority of the work concurrent audit side can go on your customer services on your sales and distribution side, and to certain aspects on the financial side. The rest all are important areas from an audit perspective, but it does not suffice the need, or it does not suffice as of right now, it does not suffice the criteria which are required to get them on the concurrent audit space. Okay. And hence, as a result, those have not been there. For example, recruitment or IT operations or the legal or labor law compliances. From a perspective, doing a process-based or risk-based review suffices. And hence, these are the areas marked in green are heavy voluminous transactional databases, and hence the need for a concurrent audit on that space. Now, if I move on to the next 4 slides depict in terms of what are the areas which can get which are covered on the concurrent audit space under each of these areas. Bullet points, but I can go in depth a little bit more on this. Revenue assurance. We've heard of revenue assurance in the telecom space. We implemented the revenue assurance in 2010. What does it talk about? Revenue assurance, as it says, is giving an assurance to the management and to the board that the revenue, what is being collected, is fair, is accurate, is reasonable. How do you do that? It's very common in the in the telecom space. The reason being is you have multiple plans. You have those plans which are GSM to GSM, GSM to CDMA, from one telecom company to another, local roaming, SMS rates, international rates, and hence, and various plans being evolved over these years. And hence, whether those have been rightly set up, are the billing happening at the right rate, and hence the revenue assurance concept came up in the telecom space. Yes, insurance companies had to change their products 5 times. And every time it resulted in change in the product setups. And every product setup has multiple parameters which are required to be set up. And as a result, things can go wrong. And what are these parameters? These parameters are nothing but these parameters are the amount of premiums that be charged, the amount of sum assured that can be given to a customer. Depending on the sum assured, what is the mortality charge, what is the admin charge you collect from a customer. Let's understand when you about a traditional product and a unit linked product. In a traditional product, your premium is what you collect from a customer, which is your component and an investment component. Obviously, the investment, because it's a traditional based product, linked product. What you pay, what we deduct for the account is nothing but, and these charges get not as too significant. Are we being charged more? Hence, we need to be compliant to the file and use. We need to be fair to a customer, and hence it has significance. The other significance is it's the mainstream revenue of an insurance company, and therefore, if that has been deducted inaccurately, the company will be making losses, and hence, on the revenue assurance side, on a concurrent audit side, revenue assurance plays a very significant and an important aspect. This is one area where AUDITime and our Arbitris tool has been helping us for the last 3 months, and we have seen significant milestones and success in this. So the first point was the unit deduction, second is charge reductions, compliance to boundary conditions, as I mentioned, another, accuracy of premium being collected from a customer being another area which is there onto the revenue assurance space. These are only some examples. There are more examples which can get covered onto insurance when you talk about revenue assurance. Second is expense management. In the insurance industry, when I said a lot of cost pressures, and hence expenses needs to be controlled. Now, if you go to see from an expense perspective, what are the biggest expense lines of an insurance company? One is obviously reinsurance. Second is commissions. Thirdly is the people, that is the HR salaries. And the fourth being all other payouts to which we make to customers in the form of surrender payouts, maturity payouts, or any kind of payouts which we make to a customer. The residual all are admin cost, are your day-to-day expenses, normal expenses which a company would incur. And hence, if you go to see what we've done is, and what can be done by this thing is, you could have the commission aspects, the reinsurance aspects, which can be automated through a continuous auditing framework, and which can validate your transactions at every day end or every payout. Things like compliance to section 40A. 40A is nothing but which speaks about the maximum amount of commissions or incentives that can be paid out to an agent. Are we paying the right amount? As per the one is as per the section and the FNU. The second is as per internal policies and procedures. Are we paying the right amount to an agent? Are we paying the right amount of incentives? At the end of the day, if you go to see at the end of the day, all these things have rules. All these things have voluminous data, which can be configured and can be implemented. Because the system throws you the results itself. So if your policy admin system and financial system throws you the results itself, you can have a parallel system which will throw you in. Reinsurance, another area where you have significant amount of risk exposures, and hence reinsurance, another slide where we have concurrent audit working on it. Lastly, accuracy of payouts, another area where IRD has levied heavy penalties and fines besides Section 40A. This is another area which has been successfully implemented. The reason being implementing this is surrenders and maturities and payouts are areas which impact a customer directly, are areas which impacts the NPS scores of a customer, are areas which are of compliance because they are there in the file and use document which is approved by a regulator. And hence these areas, if monitored on a continuous basis, helps you not only in saving cost, but it also ensures you that you pay the right amount to a customer, nothing less but nothing more as well. Compliance, as I mentioned, IRD has been levying heavy penalties. These are some of the sections which, or some of the areas where we have implemented continuous auditing, be it on the PPA, which is the Policy Protection Act, compliance to file and use provisions on various features, as I explained. NAV is also an important aspect, whereby have we given the right net asset value to a customer for all unit-linked transactions which he does with us. Recently, IRD has fined an insurance company 25 lakh of rupees because there were certain issues with their policy admin system. They are not the only one, but there are various other insurance companies which have certain issues. Now, these issues are because of frequent change of regulations, products getting launched, multiple products getting launched over a period of time, and every insurance company, be it Aviva, be it anyone else in the insurance space, have been prone to such kind of an error. Compliance to AML regulations, very important from a terrorism perspective, from a money laundering perspective, and hence to ensure that you're complying with the AML regulations, the concurrent tool can fit very well in ensuring compliance to AML aspects. Lastly but nothing, on the process side, you can do, as I mentioned, on the underwriting process, on the new business process, on claims process. These are some of the aspects which we can use concurrent audit for, be it underwriting limits, be it whether the medical grid has been compliant, whether all the policies have been reinsured or not. These are some of the aspects which can be covered on a continuous audit size, which work on a month-on-month or a day-on-day or on a week-on-week basis. Now, these are only some of the areas which we have, which I mentioned. There are many more areas which we have included in the continuous auditing framework. Some which are there on the tool, some which are there on MS Access, which we plan to migrate on a tool to ensure that we free up our resources and we have automated solutions to do everything rather than have access-based, which requires a lot of manual intervention. This sums up my presentation for the day, which covers continuous auditing, implementing it, and what have we done on the insurance space when it comes down to continuous auditing. Thanks for giving me an opportunity. The session is right now open for a Q&A session in terms of any questions which you guys have. Happy to answer them.
Thanks, Sanjay. We have indeed questions. Now I am giving one of the questions to you.
Sure.
Does the management have time for closure in case of observations are raised on daily basis? In case of continuous auditing, we would be raising observation on daily basis. Does the management has time to close them on daily basis?
It depends on the area. It depends on management buy-in. Say for example, you have something which is very prone to regulatory, which is regulated by IRD on a very strictly basis, something on commissions or compliance to file and use provisions. Our experience says that there have been instances where the management has fixed it within hours. Hours means you do something, you identify a gap at 10 o'clock. They've been able to do a root cause. They've been able to remediate the system in the next 1 hour. Whereas there have been instances where the management has not been able to take action for days. The reason being it's a code change and it requires, it's not an easy change which can be done in days. In hours it requires a day or two because you need to do a code change and do a testing. I think the biggest answer to this is who has implemented the concurrent audit in your company? Is it the management or is it an internal audit function? Who's the sponsor for the project? If the sponsor of the project is from the top, is from the board, is the board, is the audit committee, is the CEO and then MD, I see no reason why the management would not focus and close those issues, provided they can be closed. For example, a code change cannot be closed in a day's time. So it's the importance, so rather than a buy-in, if they implement it, if they are the sponsor of it, we have seen remedial actions being taken immediately. However, if I implement it as an auditor without not a buy-in from the management, no, you will not get in any buy-in. You will not see issues getting closed for day on days as well. Plus, also the fact is, what areas do you do on? Some area which only impacts 6 monthly or quarterly, and you do it on a daily basis, management is not going to focus on. It also determines what are the priority areas which the business jointly identifies along with the internal audit, and you get onto the concurrent audit framework. It's a combination of these elements. Yes, you will see those focus if the management has a buy-in.
Okay. We have another question. This is again, how can the problem of late registrations of claim in software be addressed through continuous concurrent audit?
No, I didn't get your question. What problems of?
See, in case we received some claim later, but we are registering with some prior date, can we capture that? Assuming there is
Yes, we can capture. Yes. Now, I can tell you, how does this concurrent audit, how does the framework work? It's a very valid question. As I understand, let me rephrase the question. So, and if there's any disconnect, I can, then you can correct me. What I understand from your question is, a customer comes today and he files a claim with us, which is a backdated claim, where the customer has died, say 2 months back, and he's lodging a claim right now. Will the tool get picked up those transactions and audit them? Is that the question?
Yes,
right?
yes, that can be one of the scenario.
Right? Yeah. Okay. Now the way the system works is every policy admin system, forget a policy admin system, every financial system, or if you take the financial oracle system, otherwise there's a concept of a transaction date, and there's something called there's a system date, there's a transaction date, and there's a business date. Majority every system will have 2 dates, some has 3 dates as well. You have a system date and you have a transaction or a business date or a value date for that matter. Let's take this case of a claims case. Your system date is today when you're receiving a claims transaction and you are processing it today. So systems date will get captured as today, which is the 19th of December. You have received, the claim was the customer had died, say on 19th of October, and that's the value date, say 19th of October. Typically that should not be the value date, because the value date is the day when you receive the death request, you given that day's NAV or the fund values in that day, or the sum assured value or whatever the death benefit is as of on that date. But having said that, it was on 19th of October let's take it for an example. Our system, the way the tool is built, the way any tool is on the concurrent audit space picks up is, it picks up the system date and it picks up a transaction into the tool. So it does not take the value date into concept. It takes the transactional data for fetching the data. Okay. Once the data has been fetched into the concurrent audit tool, then it requires to run the exception against the predefined rules which have been set. Now, for a predefined rule, you would either need the business date, the value date, which is 19th October, in order to find out what is the amount payable to him as of 19th October. It will use the 19th October value date and perform your rules and validate it. So the tool runs basically on both dates. It depends on the job which the tool is doing. At the first leg, the job is to pull data, which works on the system date. So if you have performed a transaction today on the system, tomorrow morning it will pick up, irrespective what is the value date in the system. The moment it picks up, then it will use the value date and all the other relevant data which is required to validate it against the rules and throw you out exceptions. And it's a live case. We have been running it successfully, and we do such kind of instances where after 5 days you process a surrender or a death claim transaction, the tool picks up and validates. I hope I've answered the question from participant.
Yes, yes. And then there is another question. As per you,
Sure.
Aviva internal audit is self-funded. How many years it took to reach this level?
See, we started our journey in the year 2010, early 2010. Um, I would say 2012, 2013 beginning is where we saw significant improvements in our processes. We saw significant findings. It took us 2 years to build our tool. And I would not say 2 years. It took
Sorry?
us around about four months plus to implement a tool on the file and use provisions. But since we had transactions, because we did an audit, we did a review of all since 2002 till 2010, and that period took us around about a year to complete because we were using tools like MS Access, and hence it took us 4 to 5 months to build it, the tool, MS Access. It took us a year to run the past data for the last 8 to 9 years, over 14 lakh books, all the financial transactions. And obviously then the results validation, the output got validated, did a root cause, and the remediation took another 6 months to happen. So it took us a 2-year exercise to complete the entire revenue assurance for the past year, for the past 10 years, which gave us results which funded our audit function for the next 5 to 8 years. This is one example. I'll give you another example. This is with MS Access model. What we did for 1 year and 4 months, we are able to do within that, all that work in 4 months using a AUDITime Arbitrage tool. So you see the difference between the time taken and the cost in the senses and the efforts going in. You took 1 year, 4 months to do it in MS Access because of the various challenges which I mentioned to you earlier. Whereas it took us only 4 months to do it in a tool, in an automated tool off the shelf, which was then developed by AUDITime. Obviously, the learnings of the last 1 year, 4 months, was there when we decided to take this tool and build this tool. But having said that, the tool is good. But it all depends on the company. It all depends on the process. It all depends on their budget, risk appetite, their cost. You can do it with MS Access. You can do it with automated tools, ACL, IDEA, Arbitrage, AUDITime. You can do it with them as well. It depends on multiple factors, as risk appetite, cost, the kind of data which you have, the kind of expertise do you have. But my take is it took us 2 years for Aviva's audit team to be self-funded for the next 5 to 7 years.
Okay, thanks Sanjay, thanks a lot. It was a nice presentation and good knowledge we gained today.
Sure.
And as you see, your time is as precious and time is running out. So on behalf of all participant and IA Bombay chapter, I thank you for your time and the knowledge you have shared with us. Dear participant, we are going to share this presentation with Mr. Sanjay's approval with all the participants. And in case you have any questions, feel free to write to IIA and we will take up with Sanjay.
Sure, I'll share my email ID as well, Manoj, with you.
Okay. Thanks, Sanjay. Thanks a lot.
Thanks a lot, Manoj. Thanks a lot, all participants, for giving me an opportunity. Thank you.
Yes.